Hello there, you're watching the weekly edition of Your Trades on ET Now. This is Priyanka Pal along with me, Sneha. Thursday's mixed data which came in from the US market, that has left major of the markets on the edge, and that's what we saw, a sell-off in Indian markets also. Nearly 1.5% cut for the whole week. In fact, Nifty, that snapped a three-week gaining streak, and in fact, it has registered the biggest single weekly decline also in over 3 months today. Not just Nifty, in fact, similar kind of cuts coming in on mid cap, small cap, on in fact Bank Nifty also. All the major indices has snapped their 3-week gaining streak. Mid cap for this matter, for this entire week, we lost nearly 1.5%. Small cap was down nearly 0.5%. That's the index which saw the least of the cuts. But then, in comparison to Nifty, Bank Nifty, and mid cap, what we saw, we've closed all indices, all sectoral indices also, and in fact, all major sectors also on the red note only. Top sectoral loser is PSU Bank, which has lost nearly 4.5% for this whole week. Energy was the second biggest loser, 3.5% cut coming in. Metal, 2.5% cut coming in for the whole week. Top losers on the Nifty were majorly from the energy pack. Stocks like Coal India, ONGC, from auto pack stocks like Tata Motors, Dr. Reddy's, NTPC again from a PSU space. Whereas on the flip side, the gaining stocks on the index, on the Nifty were Hero MotoCorp, Bajaj Twins, because of course ahead of their the listing of their arm. Asian Paints, crude was soft throughout the week. Titan, SBI Life, these were some of the stocks which were gainers, weekly gainers on Nifty. Couple of brokerage notes which came in today and on which we saw stock moving very sharply. SBI Card, it was up nearly 4.5%. SBI was down 4% on a brokerage note. Goldman Sachs, which has downgraded SBI, they've downgraded it to sell from neutral. Target price has also been cut to 742 from earlier price of 841. And this is not the first time. In fact, there has been some more notes from Bernstein and Morgan Stanley also on banks, on PSU banks especially. Goldman Sachs on SBI Card, they've upgraded it to buy from sell, and hence we saw that there was a reaction on SBI Card also. It was up nearly 4% today and nearly 10.5% for the whole week also. Vodafone Idea was one stock to where we should focus on, talk about. 10% down it was on the note by Goldman Sachs. They've given an upgrade, however, they've given an upgrade near its FPO. But then today, surprisingly, the downgrade, of course, creates a lot of question on that. So, a couple of brokerage notes, but then the whole week saw many other news also.
Absolutely, but focusing purely on the weekly action that we've seen, if there is one sector that has stood its ground, it might have not done that firmly, but has stood its ground nonetheless, is the Nifty FMCG sector. Very mild, very mere 0.2% uptick coming in on that front. On that index on a week-to-date basis, there you have it, but it's the only sector among all of these sectors on a weekly basis that has managed to close in the green. Surprisingly, it has been FMCG this time around. However, what did not do well and was the biggest sectoral loser over the course of the week was Nifty PSU Banks. That index was down almost 5% just in the course of the last 5 days. You had names like Indian Bank down 7.5%, Canara Bank was down 7%, Bank of Baroda, PNB, IOB, SPI, UCO Bank. Look at all of these banks. In fact, all the constituents of this index have closed the week in the red. This is largely what the sectoral moves have looked like. You also had a couple of counters that were in focus on the back of fundraising plans coming in all through the week. So there seems to be some activity going on that front. At least the names like Prestige Estates, Brigade Enterprise, Sona BMW, PNB Housing, all of these have announced their various fundraising plans either via NCDs or QIPs. So lots was in focus over the course of this weekend. You also had the center nod coming in for the 2,800 crore digital agri mission. So you had agri stocks that were in focus as well. Defense was a pack that initially did very well but then faded out. You had the defense push coming in from the government after they cleared the 26,000 crore aero engine deal coming in. And lastly, another important indicator to watch out for this week was that Singapore GRMs for the first time in almost 2 years slipped into the negative. Now, immediately on the back of this news, you did not have HPCL, BPCL, IOC reacting to it, but you had Oil India that bore the brunt of this news flow coming in, and that stock has also ended the week in the red. And lastly, well, yes, there is buzz in the street that SEBI is likely to notify stricter F&O norms coming in, so we'll just wait and watch on any announcements on that front. But on that note, let's get the discussion going on the week that was and what to expect going into next week. Let me welcome on board our guests today, Rajesh Palviya, Head Technical and Derivative Research at Axis Securities, and we also have Ashi Anand today, Founder and CEO at IME Capital. Gentlemen, thank you so much for joining us on the show. Rajesh, I'm going to come to you first. Quickly take us through what levels you are spotting. Secondly, tell us if this correction that we have seen is a temporary blip, or do you think we are going ahead and we're in for a lot more trouble coming in for the market?
Good afternoon, Sneh. Good afternoon, everyone. Looking at the correction in last couple of days, now Nifty slipped below again back to below to 25,000 level. That was the major put-based concentration on the monthly series as well as for the weekly series, and we have broken these two supports area on the closing basis. So looking at the near-term structure, if we sustain below to 25,000 level, yes, possibly we could see furthermore supply pressure in the continuation of this down move. And Nifty may attempt to move further lower to test its 20-day moving average, which is almost around 24,800 kind of zone. So if it's breaks below 24,800, then we could see continuation of supply pressure towards 24,600. That's the next major base concentration which we are seeing on the weekly as well as on the monthly series. So below 24,800, we could slip further to 24,600. That may be a possibility looking at the near-term data setup. On the higher side, 25,100 may act as a major supply zone. Until Nifty not crosses those levels, I think minor pullback may attract again supply pressure on the higher side. Bank Nifty structure has turned little weak, and the way Bank Nifty has broken its 20-day moving average, we believe that if it's remain below to 51,000 mark, I think there could be furthermore supply pressure we may see in the continuation of this down move, and possibly Bank Nifty can attempt to move further towards 50,200, 300 zone. That's the next immediate support area on the based on the derivative data front. So Bank Nifty is looking a little one notch weaker compared to the Nifty, and I think 51,000 is the stop loss. If anybody has already opened their short position, so they can continue with the 51,000 stop loss for downside target of 50,400 to 300.
Right, so some concerns coming in on the index now, and then banks you've spoken about, Rajesh. Let me just go across to Ashi only and talk about the recent downgrade by Goldman Sachs on SBI only. Hi Ashi, welcome to your trades. Tell us that how much this note bothers you. If you see, even if you look at the bank index, that has largely underperformed the Nifty also, the benchmark also year till date, if you see the data. And for this week also, they have dragged nearly 4.5%. Now, the concerns this note highlights, how much do you relate for the entire PSU banking space, that, the kind of gap we see between the deposit and the loan growth and the peaking of the profitability? What is your view shaping up on the PSU banks?
So actually, I think banking firstly as a space is a space which has been underperforming. And the core reason behind the underperformance has been raising deposits has been challenging over the last kind of 2 to 3 quarters. And because of this struggle to raise deposits, advances growth has also been slowing down. Now, this has led to some near-term pressure. And because of that, you have growth which has been slightly lower than expected. And you also have some amount of pressure on NIMs. That said, it's actually a space that we are very comfortable from a longer term perspective. If you just look at the overall market construct, from a 3 to 5 year perspective, if you're trying to identify sectors and companies that have the ability to grow at 13, 15, 18% and are attractive at attractive valuations, you really struggle to find a good combination of growth, quality, and valuations across other sectors of the market. Now, within banking, we are actually a lot more comfortable with leading private sector banks. When it comes to PSUs, we continue to believe that PSUs should trade at a discount to private banks. They have been consistently ceding market share over the past decade. That is something that we expect to kind of continue. So leading private sector banks can grow advances at 15-20%. A lot of the PSU banks would either have kind of capital constraints, nor not have the same aggression on growth, etc. So we believe there should be a reasonable discount. That said, we believe there is not all PSU banks are the same. There are certain PSU banks, and SBI clearly is, I think, the one bank which is probably the closest to private sector banks in terms of the way the management is growing, focus on fee income, multiple kind of capital market segments doing well. So we kind of look at SBI a little in between. We are very comfortable with SBI. It is one of the top weights in our portfolio. Honestly, not too concerned about what the Goldman note indicates, because while yes, deposits are kind of relatively tough to get into, you also have some level of kind of a lot of the credit costs have normalized. You still have attractive growth coming in at attractive levels of profitability, and valuations at about 1.3 times book are actually very attractive in a market where finding valuation and growth is actually quite challenging. So it's not something we are too concerned about.
Okay, Ashi, thanks for that view coming in. But actually, I have another question for you. Now, if you take a look at the weekly performance of all of these indices, you surprisingly have FMCG. That's the only one that's managed to hold on to the green nominally, though. But, well, yes, it's the only sector that has ended positively over the course of the week. And, you know, we have been speaking to experts. We have been hearing a lot about FMCG and the recovery that we're seeing in rural demand, commentary coming in from these FMCG majors as well. Do you think FMCG now is on track to become a solid and in fact a safety net amid a market that is so volatile at the time being?
I would actually quite strongly agree with the view. In fact, we've also been doing something similar in terms of our own portfolio positioning. We have recently increased consumption and FMCG weights. I think you need to look at this just a bit from a market construct perspective. If you just look at the last year, the entire market returns were primarily driven by capital formation related sectors. So you had defense, you had railway, you had the whole real estate sector, anything related to capital goods. That entire space was the primary driver of the markets. Consumer, IT, pharma, a lot of the other sectors were actually lagging quite significantly. Now, while the growth outlook and the business momentum in some of the capital formation sectors is undoubtedly very strong, valuations have probably run ahead of themselves, and there was a clear reason for markets to rebalance at some level. Now, in order for that rebalance to happen, you need some kind of signs of a growth recovery. And you are starting to see that in terms of FMCG. So there is clear indicators that the rural economy and rural consumption, which has been weak for the past 2 or 3 years, and one of the primary drivers behind the underperformance of FMCG companies, across FMCG companies, they are talking about a rural recovery. This is also supported by a reasonably strong monsoon. You also have various government schemes which should help kind of rural consumption. So it is a kind of a segment which has underperformed for the past 2-3 years. You are seeing some levels of a recovery after 2 years of sustained underperformance in terms of growth. And the franchises are undoubtedly amongst the strongest in the market. So while it's not that valuations are particularly attractive, I think in a market where other sectors have possibly become quite expensive on valuations, consumption could actually do reasonably well.
Okay, so consumption space is going to do reasonably well. That's what Ashi believes. Coming back to Rajesh. Rajesh, tell us the kind of, the outlook we've seen on the indices. It's gone sideways now, and especially negative for the FNO stocks. And the way SEBI is very clear about, they want to put up more measure to tighten the derivative space. They want to increase entry barriers. Do you see FNO stocks, larger cuts coming in, more damage coming in FNO stocks for going ahead from here?
So definitely the tightening which SEBI wants in the FNO space as an entry barrier for small retail investor, I think yes, we may see further more cut because a lot of liquidation we may see in the derivative space, and again there is a curb in the collateral stocks also. So I think still further more pressure we could see in derivative universe even in the today's fall also. If we analyze the the fall. The major supply pressure was there in the most of the derivative universe only. Cash segment was still holding the ground, and we have seen some of the pockets from the cash segment was showing good traction in terms of buying, but the whole derivative universe was under pressure. So I think this could be one reason as the SEBI is moving towards this tightening of on the derivative space. So that could be a one reason where we have seen this kind of supply in this space.
Thanks for that view coming in, Rajesh. But on that note, Ashi and Rajesh, please stay on with us as we slip into a very short break on this edition of Your Trades. We'll be right back. Have you back on Your Trades? Let's keep the weekly discussion going with our experts. Rajesh and Ashi are joining us once again on the show. And Ashi, I want to ask you about the outlook on next week in terms of the events. You have the GST meeting lined up for us, but even bigger than that, you have the US CPI data coming in. Now, we've been hearing talks about a soft landing. Fed is expected to cut rates very soon, and it's meeting in a couple of weeks as well. What's your outlook on what we can expect from the CPI data, given that the jobs data has, largely spooked the markets like this? So what do you have to say about the CPI data, and how do you think markets are going to react?
So I think markets are really trying to get it's pretty much a fine balancing act, right? You want the US to have a soft landing, but you want it to be kind of, it needs to slow down enough for the US Fed to be comfortable cutting rates, right? So I think by and large, most market participants are expecting the Fed to cut rates in the coming 16th to 17th FOMC meeting. This is something that the inflation data is going to be one of the most important data points that actually comes in prior to this meeting. So as long as there are continued signs of inflation coming down, that should actually be supportive of the Fed's going in and cutting rates. We've now had a good 2-3 years of sustained high interest rates, and you kind of seen the impact in terms of very weak FI inflows into India over the past 2 or 3 years. So I think what is very important is to get a kind of an inflation number which is supportive of a potential rate cut, which could allow us to finally kind of enter the long-awaited rate cut cycle, which should hopefully be some form of a tailwind to the markets.
Okay, all right. Coming back to Rajesh, the kind of data we've seen, historical data we've seen for the month of September, and generally the seasonality data, what says is major of the time we've ended with negative returns only for September month. Looks like that history is repeating itself. But then, is it too early to say, or what kind of support levels would you eye on both Nifty and Bank Nifty for the coming week?
So again, it's early to say, because again the major event is lined up in between of this month, and that can be a game changer for again this correction which we have seen since the beginning of September series. So I think the levels where we are focusing for Nifty is 24,600. That's the major support area for Nifty. On the higher side, 25,100 is the immediate resistance area, and for Bank Nifty, 50,200 is the immediate support area. And on the higher side, 51,300 is the key resistance area for the Nifty, Bank Nifty for near-term structure.
Rajesh, thanks for those views coming in. But Rajesh, I believe you also have some stock picks that you would like to share with our viewers. Tell us what you have picked out, what's looking good heading into next week.
Right. So pharma is a space where we see that furthermore continuity would be there. Most of the stocks are showing good traction. So Alchem Lab, here we see that continuity of uptrend. Stock is almost trading near to its all-time high trajectory. So Alchem Lab is a buy for upside target of 6,500. Keep your stop loss around 60 to 60. The second stock that we like is DMart. Very strong breakout on a weekly chart. After a consolidation of almost 8 to 10 weeks, now stock managed to give breakout on a weekly chart. The way stock has given a breakout, we believe that DMart can extend its gain. 54.50 is the immediate target where we are projecting, and one can keep a stop loss of 50 to 50 to buy DMart. And the third stock is from insurance space, that is SBI Life. Continuity of uptrend, stock is showing good traction. We believe that SBI Life can extend its gain towards 1945, so one can buy this stock with stop loss of 1870.
All right, those are the picks coming in, specific stocks recommendations coming in from Rajesh Palviya also. Thanks very much, Rajesh and Ashi, for joining us and sharing your valuable time and insight for our viewers. Thanks very much. Moving on, since PSU space, especially the PSU Bank, they were the big dragger for this week. But then let's get your view from the market experts also. What do they have to voice on PSU space in whole? Sandeep Tandon from Quant Mutual Fund, he believes that the long-term bull market in PSUs are not over yet. Let's listen in to what exactly he had to say on this.
We are in decisive bull run. Maybe this decade belongs to us, half century belongs to us. But you have to keep in mind that easy phase of bull run is over. But we are still in bull run and we are in difficult phase. This is a standard statement I generally give perspective to explain. Within the same logic, now get extended to other space. Let's say globally, we believe value as a thesis will be a biggest outlier, and Japan is the biggest value theme which has played out. And what is very important to understand that all PSUs are part of value thesis. So we remain constructive if I have a decadal view. But if I have a very short-term view or horizon, when we spotted that is a mild risk off period and I have to reconstruct, I will change. But if market corrects for whatever reason or becomes more volatile, which at least our volatility is very important. And if we do get some opportunity, we will participate in rebuilding these exposure. So from a structure perspective, longer term perspective, we remain very constructive. But from a very near term perspective, we are slightly cautious in this space because given the high beta and we have moved towards low beta.
Alright, that's the word coming in from Sandeep Tandon. But on that note, we're completely wrapped out on this edition of Your Trades, heading into a much needed weekend because next week is heavy on action, is heavy on data. We have the GST meeting, you have CPI coming in from the US, PPI and inflation data coming in from China. In fact, lots of data coming in. So we're going to go and get a good rest this weekend.
But then
wishing
before
you a good weekend as well.
It's the Ganpati time also. Now
Absolutely.
The festivities have begun. So wishing all our viewers a very happy Ganpati Chaturthi.
And a very happy weekend. We'll see you next week. Thank you so much for watching.